Hey everybody, welcome to this week's Ag Commodity Corner Plus podcast. It's week 47 and today is Feb 27th, 2026. Mo, what are we talking about today?
Well, today we got some good news again. Funds are long the grain and oilseed complex for the first time since February of 25. And that is good news going forward. Let's get into it. You saw our podcast image. I'm not going to bring it up again, but the funds are long across the complex, over 200,000 contracts. It's similar to last year when we peaked in mid-February. So what do you think is going to happen from now on? You think this is over? You think it's going to just come off? I don't think so.
Just getting started.
You're going to have to wait till the end, and I'll give you 4 reasons why I think it's so much different than last year. But here's the summary quote chart, and I didn't really create this pattern, but that's how it worked out. Anyways, corn. Wow. Breaking above 445. Remember last week's podcast? 445 is your ceiling. Where do you think it's going? I'm not going to show you a December corn chart, but the July and December, December is actually trading above the high from the USDA January bearish crop reports. This is good news. Soybeans, new contract high. Oil is defying gravity. It's probably going to get a little bit overdone here short term, but we'll take it. Wheat. Wow. Another spike. We'll get into that. It's waking up the laggard, Minneapolis. What did we say last week? Corn and wheat are the laggards. Minneapolis wheat. Not anymore. They're waking up. They're joining the party. I hope you're joining the party. I hope you have some bushels left to sell. Because I know a lot of you guys will not buy options and futures to replace those bushels. And crude, up 70, trading the ceiling. You think it's going to 100? Or are we going back to 50? We'll get into that. Okay, so Abhinesh, let's get started with, the CFTC updates.
So CFTC came up with their latest update, and this is as of Feb the 24th, and it showed continued buying in all of the grains. Managed money funds are now net short only about minus 22,965 contracts if you put all the 3 wheat contracts
this is
together.
Soybeans, Abhinesh.
Oh, I'm sorry. So let's start with soybeans. Spec funds are now net long 10,060 as of... spec funds were net long 10,060 as of 28th of Jan. It's been a long day. They are now net long 184,202 contracts.
And so you can see here, right at the end here, where I do the circle, they're almost as long as they were last November. This high here is about 232,000. You can see the record. This was 232 in 2020. I think this was close. I can't remember the exact number. And then you can see the record short position. So we're approaching that. I have a funny feeling we are going to break to new highs. We've said $12 for a long time. We said beans in the teens. You guys decide whether you want to take the risk. I'm rolling the dice. I think you still need to hold it. There was some news, and I didn't bring it up, but there was some news yesterday, a Chinese Morning Post that was suggesting that maybe the meeting, the setup, the planning for this meeting with Xi and Trump not going so well, but I don't know. I still think it's just more noise. I don't think the funds want to short this market. They're too afraid in the event that China does come in next week and buy some beans, or we get that meeting in at the end of March, which is not that far away, and we get a formal trade agreement. That would be nice. Now you can talk about the wheat.
Now let's talk about wheat. So managed money funds, as of the latest, are net short only about minus 22,965 in wheat. If you put all the 3 major wheat contracts together and look at the net managed money position in that. And this is due to the sharp short covering rally that we have seen. And compared to the 20th of Jan, their net short position was minus 145,616. That's quite a steep short covering rally.
Yeah, so I think after this week's rally and today's rally, we are flat. Wheat, that's an impressive look. Add some weather and funds too short, and what do you get? You get a parabolic move. This is bullish wheat. Wow, I'm impressed. I wasn't expecting this today.
Let's switch over to the stock market and the big one. Nvidia reported earnings this week, and Nvidia's blowout earnings report supposedly disappointed Wall Street, and the stock sank lower. The company reported stellar quarterly results, but the numbers were not good enough to impress Wall Street. And this comes at a time when the stock market in general is going through fragile times. Revenue was up 75% for the company, which beat the Whisper number and guided higher for Q1. And guidance, which was higher for Q1. Investor focus has moved away from, for the whole of the stock market, it seems to have moved away from short-term performance for a lot of these companies, including Nvidia, including possibly AMD and the others. And I guess the market is bothered about the capital expenditure and the pace of monetization.
Their revenue was up 75%. They guided even higher for the first quarter. They're going to still do $500 billion this year. Why do we have a problem with this company? I think it has something to do with the law of large numbers. This is a $5 trillion company, and you can't sustain growing at 75% forever. The CEO of Nvidia, Jensen, disagrees with Wall Street. He says, you can sell us today and drive the stock down, but you're not going to keep us down. I agree with him. Look, I don't think investors in Wall Street have an imagination. They never thought that Nvidia could have been a $5 trillion company. I think Jensen thinks in 15, 20 years, he's going to be a $30 trillion company. But Wall Street investors can't imagine a company that large. And I think they're struggling with the sustainability of this growth and whether it can continue. But he says he's going to keep proving everybody wrong. So we'll see. Look, we've talked about this. If you're a long-term investor, you need to buy the lower end of this trade. And I think what happened with this quarter, it just wasn't enough I don't think anything's enough for Wall Street anymore, because I think they're exhausted with this AI trade, and all they keep coming up with is concerns and excuses. Oh, well, the AI spending can't continue. It's too much. When are we going to get a return? Traditional software is going to get obsolete by AI. I mean, it just goes on and on and on. So I think for now, until we know more about U.S. interest rates and where they're heading and who the next person is that replaces Fed Powell, I think the market, unfortunately, is stuck in this tight range. But long term, if you get this thing down to between 150, 170, and I don't know if we can go that low, that is a huge buying opportunity for this company.
Last week, we spoke about how the U.S. Supreme Court struck down Trump's usage of tariffs against the various countries. Trump retaliated against the Supreme Court ruling on his tariffs by imposing initially an additional 10% tariff, and now supposedly it can rise to 15% of global tariffs. He's also warning countries that have trade deals to abide by the terms of the deal or else.
Yeah, so I think it has very little impact on the ag commodities. I think it's all baked in, priced in. Even the stock markets, they're tired of this. They're just going to continue to climb that wall of worry. So he's going to do what he's going to do. Nobody's going to stop him. But unfortunately, it creates more volatility and uncertainty going forward because, the Section 122, he's allowed to have them on for about 150 days, and then Congress has to step in and approve them. You think Congress is going to approve them? I don't think so. It's a pain, to be honest with you. It's very complicated. We don't even know if the latest on social media is he's got 2,000 lawsuits because companies are upset that they paid all these tariffs and now they want that money back. So who knows? Imagine the person that has to refund all this money and all the work they have. Oh my God. Anyway, This is a crazy, crazy dude. I loved him before. I don't know if I care for some of his policies anymore, but I don't know why he needs to create all this chaos because it is a lot of chaos. By the way, if you're a member, thank you. If you haven't subscribed to the channel, please help us out. And this week we were talking to our members about what to do with fertilizer prices. Some of you, I'm getting the phone calls. Some of you are sitting on the fence thinking you're going to get a reset in prices. I don't think it's going to happen. So just be careful because your planting season is right around the corner.
Like you touched upon earlier, Mo, let's dig a little deeper into some of those grain commodities. Let's start with corn. So May corn futures, as you guys can see there towards the right, spiked today and broke back above its 200-day moving average for the first time since the Jan was day when it took that deep dive lower. And May, so let's also possibly look at May wheat futures. May wheat futures has been a leader and up about 80 cents since that early January period. And it seems to be driving the bus higher in corn futures. More question for you. Do you think we are seeing some sort of an investor unwind out of one asset or one group of assets into another, for example, from tech, AI stocks into possibly grains or ag?
We've seen this rotation out of tech, I don't know how many times in the last year. But yes, that's why we showed you that our podcast image where the funds are long the grain and oilseed complex. I think there's more money flowing into ag commodities this year than last year. I think it could be coming from the tech. It's hard to say. But, and the corn chart doesn't quite look like the parabolic wheat Chicago chart, but this is becoming parabolic. And, maybe next week we'll give you some of those retracement levels from the 22 highs, but this is helping corn. There's no question. Corn doesn't quite look like that wheat chart, but we're almost approaching the highs before the bearish USDA crop report. You can see the ceiling comes in around that 453, but this is quite the last 2 years, first day notice, because a lot of farmers maybe had a basis contract and they had to make a decision whether to flatten out or roll. I think they were long gone before we even got to this. So the last few years, that first day notice weighed on the market. Typically, we get month-end selling. That didn't happen. So this is all very positive. And of course, the wheat. Last week, Kansas City was spiking, taking the lead. Now this week, it's Chicago. And again, I know everybody's talking drought to flood, and we'll get into that here in a second. But this continued today because the next 10 days remains dry for the U.S. plains, and I do not see rain into that month of March. It looks mostly for the eastern United States, the Midwest, but it sort of misses the U.S. plains.
Let's look at some more geopolitics. President Trump has said he's not happy with Iran in the wake of the latest talks on its nuclear program, but said he had not yet decided whether to attack the country. The US president stressed that he did not want to use military force against Iran, but said sometimes, quote unquote, you have to. Concern over the prospect of US strikes against Iran led a number of countries today to issue warnings to their citizens in the region, and a lot of them were possibly booking flights out of the region. Mo, where are we headed on crude oil due to all of this?
The fact that they're telling everybody to leave, that's a concern to me. My take on this is this. Yesterday, Trump in his meeting said, you either dismantle those 3 plants that are enriching uranium, or we have 50 carriers that will do it for you. You decide. Now, I don't know if they were having another meeting today, but I think they're having more meetings next week. Crude added more geopolitics. We're trading, look at this channel. So we talk about channels. Here's your bull channel. It's a short-term channel testing the 68 ceiling. Your support's around that 64. Market is very, very concerned. We could break 68, go to 72, but some are saying we could go to 90 or 100. Iran's not a big oil producer. We've talked about this in past podcasts with our members as well. China buys a lot of Iranian oil. How long does the Strait of Hormuz get shut down? Can Iran really fight the U.S. off? Not really. Do other players like China get involved? Your guess is as good as mine, but if this thing's headed higher and planting season's around the corner and you don't have diesel fuel booked, maybe we need to do something about this. Just a thought. I think we're heading higher. Your guess is as good as mine, but I think Trump wants to pull the trigger. His team does not. I think it happens next weekend. That's my best guess.
Let's look at the spring outlook in terms of weather for the U.S. Until now, long-term drought seems to have stretched across multiple regions in the U.S., but the first half of March seems to be bringing much-needed rain. As you guys can see there, that blue region, mostly covering the eastern Corn Belt, including parts of Iowa, Illinois, Missouri, and also stretching downwards south towards Texas and into the southeast as well. So some of those regions would be seeing some alleviation of the drought, but as you move towards the west, the western Corn Belt and parts of Nebraska and all are not expected to see a lot of rain. But do you think those rains will verify more?
Well, I think they could because we're close, and there's two systems coming across. There's more than one meteorologist talking about it. But how do you go from drought to flood? You're going to get 4 to 5 inches. I mean, according to this chart, unless I'm reading it wrong, but it's 4 to 5 inches. It's not 15 to 20. I'm sorry, but you might help the topsoil moisture, but I doubt you're going to fix this drought. You need a lot more moisture to go from drought to flood. And by the way, it misses the U.S. plains for a good chunk of it. I mean, if we go back to this chart, you can see that it remains a little drier. And that's probably why Chicago wheat continued to rally. As you get into, and that was this map here is the 46-day long-term chart. So again, we'll have to wait to see whether it all verifies. But as you get into the first half of March, it actually, end of next week is when the heat finally does arrive. But sure feels like spring soon. So we'll have to wait and see.
Looking further south and sticking with weather for South America, it looks like the 2-week outlook brings back rain for both Brazil and Argentina, or at least parts of it.
Yeah, so, I don't think there's any issues with Brazil. It's a monster crop, but if you bring back some of those rains, it's good for that corn that was planted. Is there really an issue with the second safrinha corn crop? Maybe 20% gets planted in the less than ideal window. So I don't know if it's market mover at this point.
And finally, just to touch upon that CFTC report again, this is a snapshot. And as you guys can see, a lot of green on the screen when you look at the week-on-week change, especially with those major grains. So in terms of corn, more buying. Spec funds bought about 13,548 contracts, reducing that net short to about minus 13,867, which could be, even lower if we were looking real time. Soybeans, more buying of about 20,591, net long position now at 184,202, and a lot of buying in wheat like we spoke about. In canola, we bought, spec funds bought about 19,802, taking that net long position, which was not too long ago net short. Now it's net long 28,194.
I think these reds are all green as of today, except for cotton. So you waited for my 4 reasons. Number 1, China's buying. Number 2, 45Z, biofuels, could become law in 30 days. I don't know if that helps buying more soybeans because it's a little late to the party, but it could change things for the June acreage report instead of the March planting intentions. Record corn demand red hot, remains red hot. E15, that would be a plus. So all of this you didn't have last year. And that's why the funds are adding to this undervalued ag commodity market. We went through a 3-year bull market in AI, a 3-year bear market in ag, and it's time for ag to wake up and join the AI party. And so we're very cautiously optimistic over the next 2 to 3 months. You add sprinkle a little bit of that weather scare, and we got a market in corn, beans, wheat, canola, cotton, oats, you name it. I think farmers are going to be pretty happy, but you're going to have some physical to sell. So be careful how you sell your 26. Don't get caught selling too early and get disappointed by these prices. Until next week.
Oh, do you have a saying?
Thanks for watching. Yes, there is one more saying, isn't there? Yes. Charlie Munger. Do you know who Charlie Munger is? He was Warren Buffett's right-hand man. And you know the other guy that likes the 200-day moving average like me? It's Charlie. He says more people played that 200-day moving average, they'd do so much more better. The big money is not in the buying or the selling, but in the waiting. Again, with Nvidia, if you tried to trade, if you tried to trade that quarter, you missed it, unfortunately, because I think all of that news was already baked in. So that's why you got to play the long game. I think over the next 5 to 10 years, you're going to do very well with Nvidia. It'll trade to 300, 400, whatever that number is. But anyways, thanks for watching. Really appreciate it. Take care. Have a great weekend. We'll see you next Friday.
Bye, guys.